Look, if you're chasing the next hot deal, this video isn't for you. If you want a steady, repeatable path to long-term wealth, listen up. I complemented my fast-paced career in healthcare for a quieter, powerful asset like self-storage. It starts with three ideas I live by every day: disciplined underwriting, consistent execution, and patience in resilient markets. I didn't pivot from healthcare to a flashy real estate story. I built on healthcare sales, personal training back in the day. And these fields were success. It's not flashy, it's daily discipline, showing up, sticking to a plan, and letting time compound. Over the years, that mindset helped me grow from zero real estate to a handful of single family homes, and now to over 100,000 square feet of self storage. Today, I'll tell you my journey as a practical story you can apply: how to underwrite with confidence, how to execute steadily, and how to stay patient when markets wobble. Self storage isn't glamorous, it's relentlessly reliable. Leases are month to month, demand is steady, and you can grow without dramatic capex. The magic isn't a single big win, it's a long, quiet climb. Cash flow tonight, growth next year, compounding over decades. For me, the payoff wasn't a loud headline, it was the calm certainty of occupancy staying steady, income staying predictable, and the freedom to reinvest in the next step. Three pillars hold this steady path for me: disciplined underwriting. The plan comes from honest assumptions, not wishful thinking, believe me. Consistent execution, a simple, repeatable playbook, pricing discipline, clean processes, reliable partners, and a clear vision. And patience in resilient markets. Cycles happen. The asset's resilience keeps you steady and focused. Historically, it's been the most resilient asset out there. To me, underwriting is the map, execution is the journey, and patience is the fuel that keeps you moving when the weather gets rough. Let me share a small real-world moment. Picture a 90,000 square foot facility in a growing suburb. I test three paths: base, upside, and downside. Vary occupancy from 85 to 95% and assume modest rent growth. The goal isn't a flashy forecast, it's a plan I can live by. If the base case hits, I'm comfortable, and if the upside arrives, great. And if the downside comes, I've baked in reserves and a conservative loan structure. The point is to have a plan you can trust, not a dream you hope for. You could start today with a simple rhythm. Learn the basics of underwriting and run a mock deal. Create a tight operations playbook for your facility, or start to research some third-party management companies. Consider joining a syndication or partnering to learn by doing. And build a weekly habit: quick market checks, a monthly pro forma, and quarterly KPI reviews. The path I'm on isn't glamorous, but it's steady. Disciplined underwriting, consistent execution, and patient resilience build a quiet, reliable wealth engine. If you want a simple underwriting checklist and a 90-day plan, just drop a comment. If this video resonates, like, subscribe, and share your biggest underwriting question in the comments. I may actually do a live walkthrough sometime soon on a pro forma in a future video. Bye for now.